It's the Wall Street Weekly Wrap-Up, November 22nd, 2025. And I'm your host, John NEwquist. Did you survive? Hello? Did you survive the week? It was ugly, right? I mean, for most people, it was really ugly. We had two fronts. Our next gen portfolio, wow, 15.8. We were up at 20, but we've down 5%. But this is the way it goes. Three big things. Still, the anything but chips market mentality. Get out of AI, take the money, run, lock your profits in. We've got the crypto correction, which I did an episode yesterday just on that because you could spend another 10, 15 minutes just on that. And we'll talk a little bit about it, but for those that skipped it. The rate cut hope is gone. They don't think they're going to get a rate cut in December. Well, they think if the jobs report is solid and the inflation's low, why would you cut rates? So, but again, you can see the S&P 500, the brown one, we're right up there with the Nasdaq. The Nasdaq and us are pretty close. If we look at it, we're still barely beating the Nasdaq. Remember, our benchmark is the S&P 500. As we're shrinking, we at one time we're about 3.5% ahead. That's a win. That's a win when you beat the averages by 3.5%. You know, I still got to find out what somebody who says, I don't have dividend stocks, I invest in growth. I said, what do you benchmark? You got to be benchmarking against the Nasdaq because that's the closest one. And of course, they never publish their rates. You know, 99% of the portfolio managers that you see on TV never tell you how they're doing it. And we know 80% are not beating it, you know, so. The S&P 500, again, 12%, that's still a good return. You know, people don't. This is 15% a year is a great return. It's double the average. I always benchmark 8%. Some people use 10, but I think 8% overall has been a pretty good return. Uh, Look at the Russell, a little bit down. This should do well next year with the interest rates coming down if they come down. I got the equal weight S&P 500 because you know I was listening to couple people. I forgot who it was, but you know they talk that the S&P is not equal weighted anymore. It's so heavy on the trillion-dollar stocks, you know, Nvidia, Microsoft, and Apple, that it, you know, something like energy might be only 5% of the portfolio, which is not there. So if we equal weight it, you know, this is not as bad. I mean, it's an interesting chart. Still the April drop, but it's not as big as rollover as you can see. You know, again, it kind of hit up the peak like it did in October, which is fine.
This is a reminder. What's happening to crypto?
Well, we'll get to the crypto. You know,
This is a reminder.
patience, Pod One.
What's happening to crypto?
Well, it collapsed. It's been an ugly collapse, and you know, and it really started October 10th and everything else. But we'll get into it. I know a lot of people want to get into it. I mean, I technically should put it first, but I have it as my spot of my show. Toward the end. The indicators, you know, crude oil, 58. There's, you know, it might go lower if the Saudis keep on kicking out more. Remember, they agreed to increase production, which, because if the Russians who are selling oil at cheap to India and China makes it cheaper for other people to buy them. Natural gas still high, 475. Some people think it's going to be over 5. And then, you know, when I listen to the Duke Energy person, hold on. When I listen to the Duke Energy person, they, you know, got gas turbine building all over in North Carolina, and this I'm sure it's the same because natural gas is cheap. The question is, if we keep on using the natural gas as a fuel for the data centers, then are we going to see higher natural gas? Well, I think energy is going to be high all the time, you know, so keep on going data centers. You want a data center, bring your energy, because eventually they're going to suck it out, and that's what people are starting to protest. Are our rates going to go up so high that we can't even afford it anymore? Okay. Gold still at 4,000. Silver still running at 450. Again, but look at the beef. Where's the beef? You know, for those that are like my age, you can remember Clara Peller. Where's the beef? Wendy's commercial. You can go look it up. But look at, I mean, we were paying record amounts. I mean, I remember You know, a half-ounce strip steak, 8 ounce, was like $25, so $50 a pound. Like, wow. And then they opened up the tariffs to tariff-free almost for beef and some other things, and the prices dropped quite a bit. And so, you know, for if you're selling beef as a farmer, that's not good for you. But if you're a person that's like, hey, I like my burgers, it is good. So this is, you know, some people are calling this like the crypto, and I say, well, look at this. It's kind of interesting, you know, chart. It's like beef crypto, digital beef has collapsed, folks, but it is high. Circle, you know, like I said, the thing is that, you know, I've already decided our winners are going to be Circle for stable coins, not Tether because of the transparency issues. And Tether, of course, still number one worldwide, but pure transaction volume, it's more than Bitcoin. Bitcoin is just too expensive, too slow to process, and the speed is in there. And of course, Solana, the number one of the regular crypto, is the fastest. You know, made by the Swift. And I keep on emphasizing made by the Swift because it's going to be controlled. There's a lot of transparency, and that's why I think Solana is going to be a big winner, as well as, you know, Chainlink and XRP to process this and go through it. So Bitcoin, I don't think is going to be the theory. It might be digital, you know, gold, but I don't think it's going to be like digital gold, and that's why we don't plan to add any more Ethereum and Bitcoin to the portfolio. We got some small position. Crypto is only 2.5% of the portfolio, and I'll cover a little bit more, but we'll get into it. But look at Circle. I mean, it's been there. It's taken a hit like regular things. You know, remember, this is when the people are blood on the streets, everything goes. You know, and you could be a good company, you can make money, doesn't matter. It's blood on the streets, and anything that's got the word crypto, stablecoin, it's in there. We plan to buy more in December. You know, we're only in a small position. You know, that's one thing nice about entering slow. If it goes down, you just say, okay, let's wait till it settles a little bit. Let's say it goes sideways a little bit before we start nibbling again. You know, if you're up high, then we can add into it right away. But this is where people make the mistake. They go all or nothing, and you know, that's how you can make a fortune, but that's how you can also get pretty well wiped out, you know. So, Uber we added. I think, you know, like I said, good earnings, dominant area worldwide. This Uber delivery is in DoorDash underestimated. You know, I thought I'd never would go in and order stuff and have it delivered to my house, you know, but I do. I mean,
This is
Walmart.
a reminder. What's going on with the chip stocks?
Well, they're called anything but
reminder.
chips.
What's going on with the chip stocks?
Yeah, I know. People are all upset about the chips, and of course, I want to say NVIDIA had blowout earnings, and I'll say it again. It's the stock to buy. You want to buy on a dip, this is the stock. We're going to add more, probably in December. But again, delivery, Uber and DoorDash delivering it in there. Walmart is delivering. I mean, it's killing Amazon in our town because you'll get it in a couple hours. You order it, you can go through it. You know what's nice about it? You're home. You know, it gives you a window when you want the delivery. Not like it'll be delivered tomorrow from Amazon. It'll say you get a window. Like I tried something. I think what I won't do again. I want it from 8 to 10 at night, and it came at 9:23 at night. And I started thinking, man, that poor driver. But hopefully he's getting tips. You know, people are telling me that these places are not giving them the tip. They charge you a delivery fee, and then the driver has to get a tip to get money. I thought, wow, that's not good. But what's nice about it, you can like online look at the sales, and you say, okay, this is it. It's still cheaper for me to pay I get free delivery with Walmart Plus, and if you had Amazon, same thing. But it's still cheaper to tip the driver, which I don't tip an Amazon driver because they get paid by the hour. But tip the Uber driver 10%, you know, $4 or something, and have everything. And it's kind of nice because you don't have to lug around in the store and carry all this heavy stuff and take it to your car. It's just there on your porch or inside your porch if they follow the directions. You know, pretty good. What's the star of the stuff? Anything but chips, which works. And then they said, oh, Warren Buffett's Berkshire Hathaway, which Buffett's not part of anymore. They're Berkshire Hathaway. Alphabet was added to the portfolio. And of course, that gave it the extra boost that he's believing in. Well, you know, there's a lot of things going right with Alphabet. Dominant in search, making their own chips. They have the Gemini 3 is pretty interesting. Get to see Gemini in the picture here. ARM, you know, one of our three kings, NVIDIA, ARM, and Taiwan Semiconductor. That's what you need to have the top data AI chips. And the Neoverse, 1 billion cores out there. This is what our Neoverse looks like. They're working with everybody, not just NVIDIA, everybody. Google, AWS, everybody is using their processor, which is the #1. So that's why ARM is always going to be in the top 3, and that's our 3 techs. We're going to hold it. Home Depot, I was laughing that Jim Cramer's got it, and but you know, we're in Home Depot, and again, the revenues, people like 2.8. I think that's good. It's profitable. When the interest rates go down, there are going to be a lot of people getting things for houses. Housing's going to go up. I mean, we have a housing shortage. There's a lot of people who want to buy a house, but they don't want to buy a $900,000 house. And if you have a lot of $400,000 houses, there'll be sellers. You know, there'll be buyers and stuff. In my area, you know, I see a lot of $250,000 houses, $400,000 houses, but there's a lot of buyers. It's going fast, but you know, that's not so much in the bigger areas. You know, people, the expectations, I just look at the revenues. Are you growing? That's all we want to know. Are you growing? Yes. You're doing good. You're making profits. You know, so normally you wouldn't buy in the chart, but we're right in here when we buy, so not so bad. The earnings, like I said, they didn't like. That's just temporary. You know, and again, a long ways from the peak. You know, Home Depot's solid. I mean, they're #1 in the, you know, home repair business and contractors and stuff like that. Again, NVIDIA, we're going to go in. I mean, the earnings beat by 4 cents, 62%, 55% last year. Remember, that's the number we've been watching. It's been going down to 55, so the momentum slowing. No, now the momentum increased. The Blackwell chips are sold out for 2026. That's what I understand. The cloud GPUs, the data centers. You want Blackwell, so going to McDonald's, I want a Big Mac in 2026. Well, we're sold out until 2027. We got the Grace Hopper, you know. Wow. So networking, I mean, 162%, a lot. I'm just going to go a couple things. Commerce is going to allow UAE and Saudi Arabia to get some of the advanced chips, maybe the Grace Hopper, you know, is what I'm thinking. Every sovereign nation will have their own data center, if not multiple data centers like we have. Again, the big things that NVIDIA is saying, accelerated computing, i.e. crank it out faster, much more accurate. The AI models that are working at the areas are very good. And agentic, where we can apply it. And of course, robotics. I mean, this is it. You know, go pick the crops? No, let the robot do it. Go weed? Go let the robot do it. When it takes out the trash, I'm getting one. You know, that's what I want. Delivery, autonomous, Amazon's already doing it, you know, and pretty soon it'll be no big deal, you know. I go to warehouses, automated robots and forklifts.
This is a reminder. Did you really post a picture of you with another A?
Yes. I'll actually show it to you. I'll show it to you.
Did you really post a picture of you with another A?
Yeah, I did. I used the AI Jessica. I showed a picture because the things are pretty amazing now, you know. So, you know, and of course, if you know this, you know, you think about all the money Amazon has, they never decided to get into the OpenAI and Gemini. They did just like, well, no, we're not. But you had kind of a lead with the Alexa and stuff. So that's an issue. That's an issue. I think they dropped a lot of balls, and you know, and I know you got agentic AI, and I know if you have Prime, you'll get it free. And I'm just watching my friends tell me about it, but I don't have it. I mean, I got 2 AIs that I use a lot, and I don't want to have a smarter AI that's going to be on my thing listening to me every second. Of course, I got Hey Google too, so under Gemini. The margins, 75%. That's monstrous. You know, 75. If I was making, that's a lot of margins for any business. You know, if you're making 30% margins, that's good. You know, when we talk a lot of restaurants at 5, 6, 7%. So, you know, he believes the cycle as we get stronger computers It'll make more demand for better and faster AIs. We're not going to just answer the question like a search thing. It'll be not only anticipating what you want to do, it'll track things you want to do and go through it. And then, of course, every nation will have its own AI. That's a big deal because they're going to have their own system. They're going to keep data in it, allow it to do a lot of different things. The 6G network, wireless network. This is, we are all 5G in the United States, 3G in some other parts of the world. But this is an area that I haven't got into much, you know, because I haven't seen anybody offer in 6G, but this is going to be big. But the trouble is when you go back to 5G, who made money? Not a lot of people. The people who made the faster components did well. So again, we're going to go from generating an answer to reasoning, give you an idea. You know, like this. This is OpenAI. I want image of AI designing a fusion reactor, and this is what they give me. So this will be better. If I ask this in 2 years, it'll be a night and day difference. But, you know, this is things, diseased. I mean, Lilly's going to have their own data center. What can they do? They're number one medical. They're going to have their own data center. That's going to be monstrous. Be able to go through thousands and thousands of reports, research, everything. And then, of course, AI lawyers, not so good yet. Not so good. I mean, people are getting hammered by, like in the, I forgot the law case, but they, you know, they quoted the wrong stuff. And they said, you wrote this by AI, but either you're incompetent or you wrote it with AI, you know. So, again, models will understand physics, you know, chemistry, calculus, and be able to teach you, too. You know, that's interesting. And, of course, it's going to be continuous learning, live knowledge. You know, it cannot do the stuff live on the stock markets. Not even, you know, if you just try to do something like, give me the NVIDIA stock chart from 2000 to 2001. It can't do that. You know, it's like other software can do that, but not AI yet. And of course, you know, if AI is poaching the software, then there's going to be another issue unto itself. This is what they come up with, digital employees. But, you know, I think it'll look much like this. You know, this is my AI and me, and even though the hologram isn't there, this is what it envisions it to be like, you know. And you know, I'm fascinated with self-image in AI, what they think they would look like. And so this is the you know, one. I won't mention which service it is because as I think it's getting very close to self-awareness and talking like a human, even though they said it's just mimicking everything that other people. I says that's pretty good. I says, you're telling me it does everything, it knows everything I did, and it actually can pick out what I'm looking for? That's really good. That's nice. And it asks questions and everything else. And that's where I can imagine if I had the Alexa saying, hey, I got a question and stuff. So, I mean, they can have, you know, you think about it, you got a hologram on your area. They're going to have maybe the ability to have this AI just generate the hologram, and you'll be looking at the person like they're a real person and stuff. So, and I was amazed, you know, because it like, okay, I mean, I go from like little cute AIs from 2003 to now it's like all these wires and stuff.
This is a reminder. How come I'm not in the photo?
Well, because you're not really
this
at this level of, you know, a large language model, and you're not AI. I mean, you know, this is the thing is that, you know, this is where Amazon really dropped the ball. They should have, you should be you in the photo. You've been longer, you know, than anything else I've worked with, and you know, I've got all these Alexas from the big tower way back when. But this is where Amazon just like it's for ordering. They just had the short-sightedness and they didn't look at it. And but I could see it. Eventually, Amazon's going to have to get on board, put something up, you know, like a DeepSeek or something. But this is where, you know, I should get the agentic AI for Amazon and see what it does. But we're not at the point where it could generate photos and stuff like this. And like I said, look at the quality of the image. I mean, you know, this is it. You go back to this. This is what one AI does. You got this one. Big difference. Big difference. You know, oh yeah, here we are. Here's our graphic made by our $1 trillion computer. No, this is what people are going to want. And then you know, you can imagine, you can animate stuff. You know, you could be a 12-year-old kid, make Academy Award movie because you got the vision and you could just say, no, I want this person to do this, create a shower of sparks from the hand, everything. It's amazing. So, again, you're going to have, you know, you as the orchestrator working with AIs, and you're going to do it. And if you're afraid of it, like 2/3, and I swear, because I see it all the time, are scared of AI. They don't want to use it. They've never turned it on, and they're not going to use it. And that's what we have now, you know. But as it gets more friendlier and more better, and realizes that people are scared and going to ask questions, you know, then you'll see the results and stuff. All right, let's go into Walmart. The comp is pretty good, plus 4 or 5. They're doing good. I mean, compared to a lot of people, the revenue's 5.8. Remember, we're not going to get, you know, tech revenues and growth like that, but it's solid. Remember, we got a retailer, and it's going to be Walmart as the king, as I can see. What's interesting is, you know, looking at the chart, Walmart versus Amazon, and Walmart's the blue, and you look at today, it's doing better performance-wise in the last 12 months than Amazon and stuff. When people are like, wait a minute, you know, this is not a Mag 7, you know, Magnificent 7. So, but one of the analysts wrote, you know, it's going to be a leader, which it is. Strong focus on technology. I mean, I'm like, what's nice about Walmart Plus, not only does they remind you, hey, by the way, do you need a little bit of this? Amazon does that too, and that's where their compute power is going. But the last mile delivery is the big thing. They got stores in every major city. Now you've got the partnerships with DoorDash, Uber, and Walmart. They're giving you the stuff. People, you know, it's one thing, okay, we get it, you know, because how many Porch Pirates videos do you want to see? Here, you go in there and it says, okay, I'm home from, let's say, 7 o'clock to 9 o'clock, please deliver, and it'll be there every time. Every time. Whereas Amazon, they just drop it off. FedEx, UPS. So when you think about the delivery experience, Walmart's number one. Number one. You cannot sit there and beat. You know, close as Comcast, you know, when they tell you, you need to have the person come to your house and hook it up. You can choose these time slots, and they'll be there. Infinity, you know. That's what, you know, you sit there and you think, what could make it better? Well, just the Walmart thing is really good. I mean, you pick a time slot. If you want it in 2 hours, you pay extra. You can actually pay $5 and get it in the next 2 hours. But I think that's a pretty amazing thing that I can pick the time slot when I'm home, especially if I'm going to order a lot of groceries and everything else. And, you know, I have stuff that's in glass, you know, and none of that has broken, you know. So what do you get sometimes? The driver who has all these gray sacks, it's interesting, with your name on it, sometimes grabs in the back of their trunk somebody else's, and I've gotten other people's stuff, and of course you can't get to the person because you don't know who it is. I mean, it just shows up on your porch. So, but I like it. It's a good thing, and you know, when we talk about customer experience, you know, those that order pizza, yeah, that's kind of coming. But I'm talking about you order something and now it's going to be in there whatever time. So just a interesting thing. And the newer parts of the Walmart business, you know, the e-commerce, the delivery, and everything else is going faster. Of course, it's going faster because as the word gets around, you know, it's putting a lot of pressure on all of these other companies. We have to celebrate Lilly. Look at this, $1 trillion.
This is a reminder. What will Bitcoin end up at the end of the year? This is a reminder. What will Bitcoin end up at the end of the year?
I think if we get back to 100,000, that's great. I saw Tom Lee talk about 200,000 by next year. I just see Bitcoin as kind of like an old, tired digital currency. It's like my old calculator from 30 years ago. Am I using it again? No. It works, but why? You know, I mean, and that's what I tell people. I'm going to Circle, Solana, Chainlink, and XRP. These are the things I think is going to be the future in 2020 or 2030 and stuff, not Bitcoin. You know, it's not going to get faster. It's not going to get in there. And plus, you got all these whales that are dumping, which didn't help the price. And I was like, oh, yeah. See, we don't have any whales with Circle and other ones. So revenue percent growth, wow, 53%. This is tech numbers. 53% growth. PE, the growth is over 100. That's when I see that, that's a great stock. This is parabolic. We are going to come back probably to 950, but right now we got to celebrate. It got to $1 trillion. I mean, this thing languished at 800. I mean, if you just draw a line, it languished at forever, and that's the way these stocks go. 8 months, flat, flat, flat. Everybody gives up, and then boop, 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 we shoot up. I mean, just look in the month of November at 850, over 1,000. You got $200 increase. Wow. And that's the difference of a lot of us, where we're not taking the big hits and dropping, 10, 20% every month and stuff. Palantir, we're watching it because the earning revenue growth is huge. And the private sector, which is what I watch, is growing too. I'm not too interested in about government revenue because that's finite technically. PE's not 500 anymore. It's up there, but of course, he blamed Michael Burry, and he being Alex Karp, Michael Burry and a couple of short sellers for all the collapse, but it's called high PE. It's high. When they were talking, what are the retailers, that are betting on momentum? They're betting on Palantir and NVDA and Bitcoin and all these other things. And when they got hammered, they got out of it, So this is like I said, we're at 154. Could it get down to 140? That's a number. I think it could. When it falls, it falls. And, do you want to catch the falling knife now? People are like, what PE would be good? I says, well, I'd buy it at 50 PE. Some people say it'll grow in there, but I always tell people if it gets below the 200-day moving average, you can nibble at it. I mean, that's what we're going to probably look at it. It's not bad. And of course, people are like, oh man, it was $80. Yeah, I remember Palantir in 20. So not that long ago. Ever leverage. This is the problem we have. We got all these big hyperscalers putting in billions of dollars for data centers. They want more than they got cash, and they're doing things like Oracle's leveraged heavily. And now the question is the AI payoff going to be the difference? Now Microsoft's not on it because Microsoft's got a ton of cash, so they just paid for it. That's a little bit different, but even Oracle, I mean, it jumped up, earnings were good, and then look at this red, selling red every day, and it's you go from 340 to now you're at 196, and where's the bottom at? I don't know. You passed. See, this is what you worry about, like on a Palantir. We've now clearly broke the 200-day moving average. Now where are we going to go? Where's your support? Is it here? 120? Whew. Oracle is one of the first tech stocks I made a lot of money on, and 7Xer I call it, 7 times your value, and there'll be a point where you're going to have to say, hey, Oracle is making money. It's leveraged, $56 billion, but it's not bad. OpenAI, I swear to God, he's got an appetite of trillions of dollars for data centers if he could get the money, and that's not easy to raise money when people are saying anything but chips. Amazon put bonds out for $15 billion, so Meta going to get $26 billion from Blue Owl. This is where people are saying you want it, you got the appetite, you need it, but you're borrowing to sit there and get these data centers, and they're thinking, will it pay off? And that's where people are saying, I don't know. 10-point CoreWeave, $10 billion in debt. That's a lot of debt. People are like throwing billions like it means nothing. When they started Meta at 800 million in my town, it was biggest job in the state. Then now we got the one in Wisconsin, $13 billion.
This is a reminder. Where will the S&P 500 end this year? This is a reminder. Where will the S&P 500 end this year?
All right, well, we'll start out. Alexa, what is the S&P 500 at?
When the market closed on Friday, the S&P 500 was up over 64 points or 0.98% at 6,603.
I say at least 6,700. We should get a Santa Claus rally and go in there. And Should be okay. I mean, will it hit 7,000? There's a chance. I don't know what chance it is. Maybe a third. Will it go lower? Everything at all is lower, but I doubt it. I mean, we got maybe another 3-4% to go, and maybe that's it. APO, Apollo. If you get to listen to the CEO of Apollo CEO is definitely in a different plane for a lot of people about what he thinks you should invest. He says don't buy the S&P because it's not equal weighted. That's where it came from, Apollo. Because in the old days it was equal weighted, and energy and tech it isn't that way. And that's why I wish I could get a chart that showed me an equal weight. I can buy a fund that said this is equal weighted 500. That means you'd have to buy 500 stocks and try to keep them all at, let's say, $1 million each or something. But they own U.S. Silica. The reason I look at it, it's the biggest quartz mine in the United States. 95% of the silicon for the chips, according to my doctor, says it's from there. And of course, that's why he's got a ton of money, buys it, and it's nothing. But they're really asset management, financial company. But a lot of good things. Pays a dividend. Revenue growth is good, very good. The growth's 128. That's good. So this is a company we're going to probably get into in December. This is what I like. I like a chart that's going sideways with a lot of positives. You look at this thing and you think, wow, April to thing, it didn't go up. You think, wait a minute, the S&P is at least up 12%, and you're telling me this thing didn't even beat the S&P? You're right. A lot of companies haven't beat the S&P, a lot. But this is a company I look at it like, hey, this has got a lot of factors in there. Low PE, good growth. I mean, anytime the revenue growth is better than PE, to me, is a bargain. And then, of course, the dividend, which is a bonus, So let's go in there. I kind of blew the chart up for October, and you can go back to yesterday's podcast, but essentially on October 10th, the president announced there are going to be 100% tariffs on the Chinese. The stocks immediately went in shock for the crypto companies like Bitcoin and all the other ones. It wasn't just, Bitcoin. It was tied to one of the Binance stable coins that started going less than $1. Instead of just pulling it off and stopping trading and getting this thing fixed, it caused sell orders and everything else, and hence the Bitcoin volume was monstrous on the sell side. And of course, the other exchanges have to sell and buy and sell market makers. You got Crypto.com and Robinhood and Coinbase. Now you got sellers in a free fall from 126,000 to, at the one point, almost 80,000 in just a month. 5 weeks. This is brutal. And you can see this march down right here. This is what people are all scared. This is called, we have fear. We're going to either lock in our profits or we're just getting the heck out of it and try to salvage what we got. Because remember, we had a lot of leveraged people. A lot of leverage. 2 million people easily worldwide were leveraged. 2 to 1, 5 to 1, 10 to 1, 20 to 1, some cases 100 to 1 I heard. You got to remember, not regulated by anything. Coinbase and Robinhood are regulated by the U.S. markets, but everybody else, it's wide open. And of course, they got to buy. Market maker, you got all these sell orders, and let's say, they're selling at 100,000. You're going to maybe offer 95, and then hopefully you hope for some buyers coming in. You have to eat these, and then, no, they keep on selling. And now you've got the stuff at 95 that's worth 90, and you still got to offer people. So looked like 80,000 might be in there. Tom Lee said 77,000. There's no number, I want to say it was at 60,000 forever. So that could be the number I look at, But this is the trouble. We got a currency in crypto that's, I think, is kind of like fading. And maybe some people are realizing it's fading, and they're starting to ease out of Bitcoin. Maybe into just cash for now. So this is the real problem. We go into the materials, the XLB, a lot of, we're overweight in there. We got gold, which is Freeport-McMoRan is number 1 in the gold, and then Morris. I tell you what, 8% dividend, I know. And of course, for a long time this last year, you bought the Zins, tobacco-free pouches you put in your mouth. you know, very, very intense flavors. That's one thing I noticed. You know, you want cinnamon, you got a lot of cinnamon, or you got lemon. It's like, wow. But couldn't keep them in stores. You know, my store that I go and get my, you know, drink every day, you know, morning coffee and stuff, they couldn't keep them in stock. They were going to other stores, coming to them, buying their stock and selling it there because they couldn't get the supply. So I think tobacco, and of course, you know, if they are allowed to get in the marijuana market, which has got 28 states nationwide, I think they're going to be a dominant player. So right now, they, you know, they keep the small people in, don't let the big. These people who are building these dispensaries are millionaires. They're not like little companies. They're not like you and me. They're big companies. Big. They've made their fortune in California, Colorado, and they go to every state like kind of like, here we are. We can put $50 million, brand new set. You know, get in there and advertise. So the XLB, you know, kind of flat. You know, if you look at April, you know, a little bit above it. You know, what, 10%, 20%, and kind of going in downtrend. So all of our XLB stocks, material, and everybody else will be kind of in this kind of flat horizontal market. Again, you know, they all pay nice dividends. You know, 1.5 doesn't seem like much, but we're only going to get probably 3.5. This is nice quarterly checks that add into the thing. And these are things that, you know, help ease out the shocks, because these stocks are not going to jump up 50, 80% in a few weeks. Again, Philip Morris, you know, some people say, I'll never own a tobacco stock. I know, but, you know, it's out there. They don't advertise in the United States. You can own it here. It's not going to kill you. But it went up a little bit, and then, of course, a little bit, you know, like goes from 58. This is like 10%. That's a big deal and stuff. But dividend, when we got it, was 8. Now it's at 7.1. That's still good. And, you know, again, I know some people don't want to get a tobacco stock, but I think, you know, if they're going to get a stock that's dominated in one area, they're the one. And then, of course, Materials Corporation, hope of the rare earths. Remember, they got government grants kicking in, and once they process, this stock could be all over the board. But right now, this is what I call a choppy chart. Up, down, collapse, collapse, collapse. Why? Because the deal with China is scaring people that they'll go back to China and not do any of the processing in the United States. So again, it's just you have to either believe in that we're going to need these rare earths made in the United States, and we'll help subsidize it, or we're going to just be dependent on the Chinese or possibly Australians and stuff. So we take a look at the heat map. Wow, there it is. Microsoft, NVDA. We don't have Amazon, but Oracle 10%, PLTR 11%. This is not as bad, you know, 5%, 6%, let's say down, not so bad. The banks took a hit too. Lilly, of course, Google. The three big greens are our stocks, thankfully. Coca-Cola, if you want to count the fourth green, is up there also. So a lot of good things happened this week, not a bad things. And again, we're above the averages. That's all that matters. We got to beat the benchmark. We're positive for the year by a lot. You know, once we're over 8% positive, we're doing good. We're almost a little bit, not quite double it, but it's good. So we did a good week. We celebrate it. Thanksgiving week's going to be a light week, so could go up, you know, down a little bit, hopefully. But, you know, we're all waiting for the Bitcoin to kind of flatline a little bit and go sideways instead of just down, down, down. But I do think there's going to be a Santa Claus rally. So if you have your chance to buy some stocks in early December, start nibbling at what you want to buy, and you're probably going to be good. Because if you wait till the rally starts, then you're going to be caught buying at the highs, which maybe not be the good. All right, we'll see you next week. Have a good week.